Hey guys, Stockaholics, thank you guys for being here today. Scrapping goes parabolic. I am very happy to finally be reporting that we are seeing a acceleration in scrapping taking place in the oil tanker space. And we are not only seeing an acceleration, but we are seeing a tremendous acceleration, not only in the amount of vessels being scrapped, but also in the deadweight tonnage of vessels being scrapped. Meaning we are seeing some very large vessels being removed from the fleet. It is finally happening. The oil tanker executives are getting their collective asses together. So that's largely what I'll be talking about in this video. I'd also thought that I would mention some risks in the oil tanker space in this video. The reason I thought I would mention these is because I would like to mention that I am the most bullish on oil tankers that I have probably ever been. And to at least appear to have some balance, I thought it would be important for me to mention some things that could go wrong with the investment thesis. I wanted to talk a little bit about steel. What we're looking at here is a chart of scrap steel pricing, US dollar per LDT. These prices are some of the highest prices for scrap steel we have ever seen. And we are beginning to see as some of these oil tanker owners out there are taking advantage of it. They are sending those very old vessels to these scrap yards to collect some of the scrap steel value. What's also good about these high steel prices, especially when you're in a bear market, is that it makes it very difficult to order a new ship. So if an oil tanker owner or a company out there wants to go and buy a new ship right now, the prices on new tankers look very unattractive, especially when we're thinking about the anemic earnings that a lot of these guys are making right now. There's another part to that too. We also know that the containers are in a period of euphoric earnings. They're earning tremendous amounts of money. And likewise, they are doing what all shippers do in every cycle. They go out and they purchase a lot of ships. So those yards are filled up with all these container ship orders. And what that's also doing to the other shipping segments is increasing the price of new buildings beyond just the price of that steel going up. So this is kind of like the perfect storm in terms of, or the optimal conditions when we're thinking about reducing the overall oil tanker supply. Since my last oil tanker video, I believe it was about a month ago, we have seen 4 VLCCs, 3 Suezmaxes, 5 Aframaxes, and 2 Panamaxes scrapped. Once I started to notice that scrapping was picking up a few months back, that's what made me excited about re-entering the space. And now that we are seeing scrapping accelerate even more, I am getting very excited. The reason I am getting excited is because these are the kinds of things that lead to bull markets, right? When you're in these protracted bear markets, when earnings are extremely anemic, historically it takes about 12 to 18 months for this scrapping to really begin in the shipping space. When you start to see these things, inevitably it leads to a bull market. And it also tends to coincide with the most pessimism in the space. And I don't think we've seen a tremendous amount of pessimism like we saw in the space a year ago, which is why I think that there still is the possibility for a lot of downside, at least in the equity prices for the space. But I know that inevitably, based on the patterns we're seeing, this has to lead to a bull market. So that's why I am super excited. I'd also like to say, you know, when I think about all of the cyclical commodities, and I largely think of shipping as also a cyclical commodity, what we've seen through this distortion cycle, that's kind of what how I see the business cycle we've been in since the pandemic started. In my opinion, there's almost nothing that is cheap, at least in the commodities space. Tankers and maybe gold miners, although I think a lot of you guys know my opinion on gold. Tankers are like the last bastion of value in the cyclical commodity space. And when you see this pattern happening, it just makes me so excited because I know that the probability of a downside still exists, but the probability of tremendous upside is maybe not immediately probable, but inevitably very highly probable. I wanted to show you guys another way to kind of visualize the scrapping data that I kind of just showed you guys a second ago. This is there's two major things being shown on this graph. These lines here represent the nominal amount of oil tankers being scrapped by year, and this chart is going back to 2017. This year, we have this yellow line, and we can see that this line is just accelerating and going up beyond the levels that it has been in times past. I think part of the reason for that is we have some of the oldest fleet that we've had in, in a very long time, which is another reason, by the way, that I'm very excited about getting involved in this space. There's a lot of pressure for there to be an imbalance in supply and demand at some point in the near future. This gray line here represents the 2018 nominal number of tankers scrapped, not talking about tonnage or size or anything like that, just the total amount of vessels scrapped. This was some of the highest amount of scrapping that ever took place, the amount of vessels removed from the fleet. We are rapidly approaching that, and if this trend continues by the end of the year, it is likely that we will surpass those levels of scrapping. Now, what was interesting though this year, you see these bars down here. These represent the deadweight tonnage of the supply, the amount of oil essentially that can be transported from point A to point B on oil tankers. That amount of tonnage was historically much lower than we saw in 2018. And this is actually something that's very strange to me because normally in these protracted bear markets, which we've been in for about almost 12 to 18 months now, you start to see more pressure on bigger vessels. So you start to see more of the big tonnage like we're starting to see now get removed from the fleet. So it was very strange to me to see that it appeared that it was a lot largely smaller vessels being removed from the fleet instead of larger vessels. So that was a strange one. But like we just saw, this is about a week old. And in this week, we have seen, I think, 3 VLCCs being scrapped. So if that trend continues, and my hypothesis is that it will, these lines, the gap between the gray bars and these yellow bars, which is this year, and by the way, the gray was 2018. I think that gap is very likely to contract, or they're likely to meet each other, maybe within the next 6 to 12 months. If we have strong earnings this winter, and then we might see a reduction in this amount of scrapping. That would be great if we do. I'd be very happy to see strong earnings in the wintertime. But to be honest with you guys, I don't think that we will. I think that there is still a lot of tonnage that needs to be removed from the fleet for there to be the real strong bull cycle that we're looking for. I made a video talking about this phenomenon. This is the World Bunker Index. Essentially what we're looking at is the spread between the fuel for eco vessels or vessels that have scrubbers on them compared to vessels that don't. There's an investment that oil tankers have owners have to do to install this stuff into their ships, and it costs a few $1,000,000 depending on the type of vessel that you're installing these things into. Now, if you have a very old vessel, it makes almost no sense to install this stuff because you have to think about the duration of time that you could recoup the cost of this kind of investment into that vessel. Now, it does happen sometimes where people decide to do it anyway. They put it in a scrubber or whatever into an old vessel. But what a lot of older vessels instead have to do is they run on this more expensive, cleaner fuel. And what that causes is there's a spread essentially between what is called high sulfur fuel oil and very low sulfur fuel oil. So this dirty stuff is a lot cheaper, and you can run it if you've got the appropriate stuff in your ship. These IMO regulations are putting a tremendous pressure on the bear market in tankers. These people who have these old boats are very likely to not make an investment in putting in this stuff that they need to reduce this cost on them, because it's just not worth it with the life cycle of the remaining life cycle in that vessel. I wanted to read this little blurb here because I find it to be kind of paradoxical. I think that the zeitgeist, the way that a lot of people see stuff, is completely backwards. This is I'll just read you this blurb. A new report from Lloyd's Register has called for immediate action on maritime decarbonization. Well, I think we've seen that many times in the near past, in order to prevent future supply chain interruptions and minimize disruption to the backbone of world trade. This immediate action, this thing that we've been seeing, the additional pressure on these oil tanker owners to become more carbon friendly, is the cause of supply chain disruption, or the likely cause of it in the future. It's not adapting to whatever the people want. It's these regulations. That's just, again, another reason why I'm so bullish on the space, because all these things have it completely backwards, right? LR pointed out that transition to zero carbon shipping, I don't know how you're going to do that. You guys let me know if that makes any sense, will be among the most significant in the sector's history, and warned that a lack of regulatory certainty and support from policymakers could see a rushed and uncoordinated transition, like we are already seeing, potentially leading to significant supply chain disruption. I've mentioned this a few times. I don't think that this really affects bull markets. I don't think it affects containers right now. I don't think it affects bulkers and some other spaces. I think it largely affects shippers when they are in bear markets, because just these cost pressures put tremendous pressure on owners when they're already losing money, right? The LR study found consensus among maritime experts that shipping companies, their customers, and governments need to work together on global solutions before the urgency of the climate crisis forces the sector into disruptive and fragmented changes. I would argue that the shipping companies, their customers, and the governments are the ones who are responsible for what is likely an impending supply chain disruption when they're removing too many ships from the fleet, which is why I'm so excited. The report also flagged up the importance of infrastructure and the availability of new alternate shipping fuels. I was looking for some OPEC Plus projections recently, and I stumbled across this article by Stanley Reed of the New York Times. I wanted to share this article for a couple of reasons. First, from what I believe is kind of the delusion of a lot of green enthusiasts, I guess I would call them. And the other because it's important to not only think of oil tankers in terms of the supply, which we are seeing being reduced, but also in terms of demand increasing. OPEC says oil demand will exceed pre-pandemic levels in 2022. The Organization of the Petroleum Exporting Countries said on Monday that demand for oil was expected to rebound above pre-pandemic levels next year. It's a funny thing, when I was reading a lot of articles by similar, I guess we would call them authors at the New York Times, that were calling for the end of oil a year or a year and a half ago, when it just so happened that the oil cycle that we were in was at its bottom. In its monthly oil report, the group said it expected oil demand to average 100.8 million barrels per day in 2022, compared with just over 100 million in 2019. A modest increase. I will hope that we would see more than that. In my opinion, I think that we will need to see more than that. Unless we see significant levels of scrapping, at least at the rate that we are now. Just to be safe, we would much prefer to see higher levels of demand. Yeah, the forecast is evidence that the world economy is still heavily dependent on these evil emission-causing fossil fuels, despite growing concerns from some people about climate change and a steep fall in oil demand during the pandemic. The news emerged just as world leaders were preparing for what many analysts predict will be a crucial climate summit known as the COP26 in Glasgow in November. Sales of electric cars have grown strongly, and investment in wind and solar energy has held up surprisingly well during the pandemic. But the growth in demand for energy, especially in China and India, will offset such gains, according to OPEC forecasts. China, for instance, is expected to consume almost 15 million barrels a day in oil next year, 1.5 million barrels a day more than it burned in 2019. So, if you understood a little bit about fossil fuels, you would understand that not only are they used for fuel, like in vehicles. So, if China does continue to accelerate their electric vehicles, which I assume that they will, that would eat up in some of that consumption. But the majority of oil demand comes from a lot of other things besides just this fuel. So, you really need to think about the entire oil complex. And when we think about China, they produce a lot of oil-based goods, not just fuel derivatives. The pandemic slammed oil demand, which plummeted by around 9 million barrels a day last year, or about 9%, OPEC said. Oil consumption has recovered strongly, but the emergence of the fast-spreading virus that should not be named has applied the brakes. Now OPEC expects some of the recovery in oil demand previously forecast this year to be put off until governments and their overreach are put in check by their peoples. In its report, OPEC said it was raising its demand forecast for 2022 by 900,000 barrels a day, while slightly lowering its estimates for the final 3 months of this year. Oil consumption will grow by a hefty 4.2 million barrels a day next year, after a surge of 6 million barrels a day in 2021, according to OPEC. The pace in recovery in oil demand is now assumed to be stronger and mostly taking place in 2022. Now, I wanted to mention some of the risks in oil tankers, and I think that these two right here are some of the biggest risks. At least these, if they have a probability of increasing the duration of the bear market. And the longer a bear market lasts in the oil tanker space, if we are equity owners, the probability that our equities decrease in value during a protracted bear market is very likely. So the first event here is actually what we are seeing in China. And recently we are seeing that there is a very large situation taking place with a company called Evergrande. It's basically the biggest real estate company, whatever, responsible for a large portion of the real estate market in China. And if you know a lot about China, essentially their real estate market has been in a bubble or a hyper bubble for the last several years, right? And I think that there is a non-zero probability that can lead, when that collapses, to an economic recession in China. And if and when that does lead to a recession, that will lead to a reduction in oil demand in China. And this is really, really bad if this happens to oil tankers. The reason that this is bad is because China is one of the largest oil importers in the world. So if they go into a recession, the pressure that's going to put on oil tankers, it will be, they thought it was bad now, it will be tremendously bad. The other is this here, and this is something that I don't think is talked about much. There is a very large refinery that is coming on, is being brought into production, or will be brought into production very, very soon. And that is actually in Nigeria. Now, I've mentioned before that I think a lot of the reason that we are likely to see increased oil demand in the future is from emerging markets. And one of those large emerging markets is Africa. Nigeria had largely imported a tremendous amount of product petroleum. They have a pretty strong oil production uh, industry, but they don't have a very large, or at least they didn't have a very large refining industry. So what this caused was a lot of oil tanker demand, where they would be sending off crude and importing product. That is likely to change. They are not likely to be using oil tankers nearly as much as they have been in the past. So that is definitely a tremendous risk for oil tankers. Now, I'm going to mention in a moment that that is, in my opinion, likely to be offset by some other patterns that we are noticing. Right. Although I mentioned that Nigeria, I think that there's a potential for a lot of negative demand there. There is a lot of other places that we've seen in the very recent past, in the past year, where we've seen a lot of refineries closing in Australia, South Africa, places in Europe, North America. And, to be honest, there's a lot of good reason for that. You don't really want to have refineries in your backyard if you can help it. These things kind of suck. They're highly pollutive. They're not a lot of fun to be around, right? So there's a lot of, I think there's a reason you're seeing a lot of this happen in the West, besides just the green energy transition zeitgeist, right? We're also seeing a lot of these refineries come online in the East. So there's a lot of changes taking place, and for me as on a individual level to kind of analyze all of the routes and how this is going to be affecting the supply and demand of tankers, it's very difficult. I don't know that I could do it. I don't, but I do know that when we're seeing places in the world have refinery or imports reduce, we're seeing places in the world that are going to very likely have to see imports increase. So for me, I just kind of, in terms of an investment case, I just kind of use this as a net wash because number one, I'm not smart enough to figure it out. And number two, based on what I can see and observe, it seems as though it is not likely to either be a net positive or a net negative when you look at this in terms of originations of oil, crude oil, versus destinations of that stuff versus originations of product and destinations of that product. This is why I think that it's very important. I see a lot of people who are involved in the product space who aren't necessarily concerned with the crude space. I think it's important to have a very large, just kind of see tankers in general as just a monolith, as one entity. And by the way, we've seen some very strange things in the year where we saw like VLCCs carrying product and things like that. And I don't listen to these oil tanker executives. When you see stuff like that, it tells you that a ship carrying oil is very similar to a ship carrying product. Yes, there's reasons, there's delineations between these vessels, but under extreme market conditions, those kinds of separations, I guess, of these segments tends to intermingle. Anyway, I'm very excited to I'm just kind of excited, although I do have money and tied up in the space. Obviously, I am rooting for the success of that money, but I'm also just excited to kind of see what happens in the space. It is just, it's just a fascinating, dynamic industry. I'd be curious to hear your thoughts. Are you as bullish as I am, or am I a big dummy? Let me know in the comments. I'll see you guys soon.